Coming up on Market to Market, USDA officials bring their bird flu battle plan to the Midwest. Congress puts a temporary patch on the transportation bill for the 34th time. And the Iranian nuclear deal could add to the burden of drought-stricken Western growers. Those stories and market analysis with Don Roose next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, July 31 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. An expanding economy pushed up against a retreating Chinese market and a lack of confidence over the possibility of higher salaries. According to the Conference Board, consumer confidence fell nearly 10% last month on concerns about stagnant wages and the financial situation in foreign markets. After 2 months of declines, the Commerce Department reported orders for durable goods rose in June, fueled mostly by commercial aircraft sales. When the volatile transportation sector is taken out, the index moved a scant 0.8%, still the best in 10 months. Crude oil flowed down to its worst monthly showing since 2008 on news of rising supplies and poor stock returns. And even with all the mixed news, Wall Street recovered some of the previous week's losses. The avian flu outbreak that struck the Midwest earlier this year is still fresh in the minds of chicken and turkey producers. While no human cases of the virus have been detected anywhere in the world, the disease wiped out millions of birds and racked up hundreds of millions in losses. And as the first flocks are being replenished, there was a Midwest gathering to discuss plans for what to do if the disease resurfaces.
It's not something that the Congress has directed us to do. It is something that we have decided to do because we know it's the right thing to do, to work with producers during a very difficult time.
USDA Secretary Tom Vilsack was in Iowa this week, speaking with poultry professionals about the latest developments in the fight against avian flu. The Georgia-based U.S. Poultry and Egg Association brought together 300 poultry industry professionals to discuss solutions to problems that occurred during last spring's avian flu outbreak.
None of us knew this outbreak would be this big, and so certainly the lack of preparation for that big an outbreak exposed some of those things that can make us better next time around.
Iowa producers suffered the most from the H5N2 outbreak. Over 34 million birds had to be depopulated, and 77 egg-laying operations were taken out of production before a lengthy cleanup process could begin.
It's been a big help to have USDA pay an indemnity, so the value of the birds, the loss of that, and then being able to also pay the cleaning and disinfecting and disposal of those birds. But this loss of income in between is huge.
All that assistance is running up quite a tab. Indemnity payments and 3,000 additional workers to help with cleanup and disinfection have pushed the price tag closer to the $700 million mark.
The big unknown is when the temperatures go down in the fall and you have bird migrations, will we have a reoccurrence? And obviously, we want to do everything we can to try to prevent that from happening because this has been devastating.
Wild bird populations are believed to be one way the disease is spread. But there was good news for producers this week as USDA officials announced that an H5N2 vaccine, proven to be 100% effective for chickens, would be ready by the time the birds begin migrating in the fall.
I'm pleased that USDA is trying to be really proactive and encourage countries to use science and not emotion in making their decision on issues like this.
However, the new vaccine may have unwanted side effects. Some producers and processors are worried U.S. trading partners will continue to ban U.S. poultry products despite the positive results of the quickly developed vaccine. Currently, 18 countries, which purchase 14% of the domestic output, have banned U.S. chicken from crossing their borders.
We have expressed in no uncertain terms concerns about that approach. We don't think it's consistent with the international regulations. We don't think it's consistent with the science. We think it's much more appropriate to look at a regional or state by state or even within a state bans.
In an attempt to allay fears about the new vaccine, USDA's chief veterinarian testified in Washington, D.C. late this week.
Now, vaccine is a tool. It's a tool that we need to use wisely. It's not something you should use consistently and continue, because then its effectiveness has dropped.
High summer temperatures have stopped the spread of avian flu across the Midwest. But when colder temperature approaches and wild birds begin flying north, government officials hope their work will have helped producers fight the disease if it returns.
But the reality is that we need to plan for the worst and hope for the best.
Growing crops and raising animals to feed the world is only part of the equation for America's farmers and ranchers. Solid transportation routes are one of the big factors in that formula, along with favorable growing conditions and solid markets. According to the Department of Transportation, 14% of roads and 25% of bridges are in poor condition across the nation. Many states have infrastructure problems well above that national average. Congress has yet to provide long-term relief for the problem, and as one agricultural marketing group put it this week, they've just kicked the can down the road. For the 34th time since 2009, Congress passed another in a series of short-term transportation funding extensions early this week. The bill is anticipated to replenish the statute by $8 million, which will support road and bridge maintenance until October 29th. The bill has previously been funded by gasoline and diesel taxes, but those fees have remained the same for more than 2 decades, making it more difficult to keep the account full. The potential political backlash from any kind of increase has kept House and Senate members deadlocked over the issue. The Senate followed suit with its version of the measure before leaving Thursday for a month-long vacation. Before voting began on the temporary measure, senators passed a $350 billion long-term transportation bill. The act would make changes to highway, transit, railroad, and auto safety programs, as well as renew the Export-Import Bank, which makes low-interest loans to help U.S. companies sell their products overseas. The western United States is under pressure from what is rapidly approaching a half-decade of drought. In California, where nearly 50% of all U.S. fruits, nuts, and vegetables are grown, a legal battle is in progress over who gets to use the water resources and how much of that sustenance can be pumped onto fields already panting from the heat. While rural and urban factions in the nation's salad bowl continue to fight over finite natural resources, half a world away, a nuclear deal in the Middle East could test Golden State producers. Josh Bittner explains.
As California's chronic dry spell bears down for a 4th consecutive year, parched streams and reservoirs like Lake Isabella, the victim of exceptional drought, are Exhibit A for the most dire classification of the U.S. Drought Monitor.
We're at about 10% capacity right now, so we're starting to see the cumulative effects that can happen after several years of low snowpack and low rainfall. That affects all the farmers downstream from here.
A percentage of Kern River water below the lake nourishes areas that produce vegetables, fruits, and nuts sold in supermarkets nationwide. Various crops are raised in Kern County, and some grow solely in the state's drought-stricken Central Valley.
Kind of frustrating to walk them because there's very little crop.
80% of the world's population enjoys almonds and pistachios from the state. What we grow here cannot be easily duplicated in many other places around the country, let alone around the world.
According to the Kern Economic Development Corporation, Kern County produced over $6 billion in farm commodities in 2013, second among all counties in the U.S. Kern also boasts $15 billion in annual oil production, making it the nation's #1 oil county. The Golden State itself is the country's 3rd leading petroleum producer. Business advocates say the area's commodity tandem has helped fill state coffers.
The tax revenue that's going to the state Frankly, the state budget wouldn't be balanced if you didn't have the oil and ag tax revenue.
The bottom line is this. This nuclear deal meets the national security interests of the United States and our allies. It prevents the most serious threat, Iran obtaining a nuclear weapon.
As crude prices try to claw their way back from the recent glut, some analysts caution reduced global trade barriers, part of an agreement with Iran, could have impacts on domestic commodities. The rogue nation sits atop the fourth largest crude reserves in the world, producing nearly 3 million barrels a day, with plans to add 500,000 more.
The Iranians appear to have prevailed.
GOP congressional leaders voiced their opposition, but the president vowed to veto any legislation aimed at unraveling the nuclear pact.
It's like anything else. I mean, you get so tight, you're going to look at it and say, hey, it's cost me more than what I can afford. So what do? You don't continue with that project. You shut her down.
Investment firm Goldman Sachs says if sanctions are lifted, it will take Iran about a year to wade through procedure and compliance issues to step up production. But it is the international pariah's second largest export, behind crude oil, which truly vies for dominance with its American counterpart in California.
We normally get a good crop for us up here is about 18 truckloads. Last year we had 2.5.
Roy Perucci is the farm manager for California Pistachios, which operates on 160 acres north of Bakersfield. At $3 a pound, Perucci says neither drought nor low yields will halt production.
You just keep going. I mean, you can't give up. And the market's been good, so even though you're not producing high, the price has been fantastic.
According to American Pistachio Growers, an industry trade group, California cultivates nearly 99% of the nation's pistachio crop. The tree nut represents a more than $1 billion industry, with 513 million pounds harvested out west last year. The Iran Pistachio Association, a Middle Eastern industry think tank, estimates Iran's average pistachio harvest at 560 million tons. And while the American and Iranian markets have gone head-to-head, the U.S. banned the Persian nut outright in 2010. The world market followed suit in 2013. As supplies tapered off, Golden State entrepreneurs reaped the benefits. Pistachio prices have increased 40% over the past 5 years. If Iran opens the spigot, flooded markets might hamper returns on the West Coast.
But we raise such a better quality nut than they do. And
so far, officials with California's pistachio industry have shrugged off the specter of competition from the Middle East, saying farmers will endure any price dips and prosper. And a spokesperson for the Administrative Committee for Pistachios, a quality control entity created by growers, says high levels of contamination from aflatoxin, a toxic fungus, would keep Iranian product largely out of U.S. and European markets.
And until you get like a pair of squeezers or pliers and squeeze it, you don't know if there's meat in there or not.
However, the biggest challenge for California's pistachio farmers might still be drought. Even though the nut is among the most profitable perennial crops, with tree life expectancy at over 40 years, each plant consumes about 3 acre-feet of water every year. And as surface waters shrink away, the agricultural industry has tapped other resources. California is one of few western states lacking a comprehensive statutory framework for groundwater regulation. As such, the current predicament has ignited legal battles over state authority and all manner of historic water rights. But recent state and federal legislative moves have convinced Perucci voluntary conservation efforts will yield the best possible outcome in a state desperately battling for every available drop.
We need some control on our groundwater. We don't want the state involved. They're allowing us to make our own plan.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
A benevolent weather forecast, favorable crop conditions, and profit-taking pushed the grain market lower. For the week, September wheat fell 13 cents, while the nearby corn contract was off 22 cents. Soybeans fell back again this week as good weather and cheaper foreign product pressured the November contract 27 cents lower, with the nearby falling 14 cents. Soybean meal September meal prices mirrored the move, falling $16.10 per ton. In the softs, December cotton dropped for the 5th week in a row, losing 53 cents per hundredweight. Over in the dairy parlor, August Class 3 milk futures rose nearly a dime. The livestock sector continued to be mixed as the October cattle contract gained $1.80, August feeders climbed $1.05, and the October lean hog contract reversed course, losing 30 cents. In the currency markets, the U.S. dollar index gained almost 0.1%. Crude oil continued its downward slide, closing $1.02 per barrel lower. COMEX gold gained $9.30 per ounce, and the Goldman Sachs Commodity Index lost a little more than 9 points to settle at 377.90. Here now to lend us his insight on these and other trends is one of our regular market analysts, Don Roose. Don, welcome back.
Thank you, Mike.
We are glad to have you, and let's talk about this wheat market first. We've been on a very steady slide here, closed this week in Chicago under $5. What does that tell you about this upcoming week?
Well, you know, really where we're at in the wheat market, Mike, in 1 month we've dropped about $1.20 on wheat, so just a hard torpedo to the downside. And really where we're at right now is we've reached some support zones. We had the July report, which was supply bearish, bigger supplies. And then as we moved down, we just weren't competitive in the world market, so we moved into a demand bear market. Now we've reached this level where we're deeply oversold. We're at some support zones, and we need a catalyst to push up here. But the good news is the end of the week we did start to sell some wheat, so we're competitive to a certain degree. Funds are now just mildly short in the wheat market. So if we have some kind of a catalyst, we're 8 days away from the August crop report. You know, that may help us a little bit, but we'll keep our eye on the weather probably more than anything.
Would continued export sales be enough of a catalyst to pop this thing any higher?
Well, that's really what it's all about, is the export market. And, you know, the problem is you have Russia and the EU continue to sell under us. Canada's crop is bigger than we thought it was going to be. So I think really what you're looking at is these technical oversold levels. You get some kind of a 20, 30 cent rally. Those are probably more selling opportunities. You get up to the 550, 560 areas. You know, we can't move up too far, Mike, otherwise we're just not competitive in the world unless we have some weather problems around the world. That's really probably what you're looking at.
And weather problems, really the focus would be Australia in an El Nino year. Would that be what the trade is keeping an eye on?
That's right. Australia is a big exporter, and it's an El Nino year. Typically Australia has some kind of weather problem. So far they haven't. It's not too late yet. And then also Asia, India could have some weather problems. So keep your eye on those areas. But always when you're this oversold at these levels, you have to be careful because it doesn't take much and you can have a pretty good bounce in the market.
So keep an eye out and hold tight until we get that, and watch for that 20 to 30 cent bounce.
Yeah, I think that's what you're at. I mean, these aren't selling opportunities when you drop $1.20 and you're this oversold, so you wait for your next pitch.
All right. Well, let's jump down into the corn market. 21 cents down on the week here in the old crop and new crop corn. Both of them down 21.5 cents. Are folks really that confident about the condition of this corn crop out here?
Well, you hit the nail on the head. It's really the western corn belt versus the eastern corn belt. Corn very much like wheat. We torpedoed down in but a shorter order. In 2 weeks, we've dropped about 78 cents on corn. So, you know, the opportunity was there on the upside on the rallies. Now we're on the lower end of the range. We're deeply oversold. You know, this isn't really an opportunity to make new sales. You have to wait for some kind of a rally for catch-up sales. Probably more of an opportunity for end users if they want to get covered to a certain degree. But a lot of support at the 360 to 380 level on December corn held this week. Probably a bit of an issue. Funds, and maybe it's not an issue. The funds continue to be just big longs in the market. As of Friday, still over 200,000 corn long. They're not shaking their position. We have a gap to the upside on D's corn up to 402. So if we get some kind of a catalyst, you know, that's probably your upside target. But all we know right now is that we're deeply oversold. You're at support. Probably not an opportunity to make new sales here.
Do you anticipate any big moves coming after that August report?
Well, that August report is a big report. It's probably going to be, you know, when you look at it, we forgot, it's, first we were worried about the crop was perfect, and then the Eastern Corn Belt, we lost the crop. So we went up to these 454 area on corn. Now all of a sudden we're saying the Western Corn Belt's huge, and it's going to make up for the Eastern Corn Belt. We still have a long ways to go to figure this out. So I would say that we're probably going to add a little risk premium back to this market in 8 days going into the crop report. We'll see if the funds hold on to their position next week, but that's the bear story if they happen to liquidate. But deeply oversold down here. I certainly wouldn't tune berries at these levels until we get a bounce.
And if we do get a bounce, would you be aggressive in selling if we get a bounce here in the next 8 days before the report? Or would you meter out sales and hold out until the news after the report?
Well, it's always tough when you just came off your big opportunity. I mean, you know, you had not only 15, 16, but even 17 is some opportunities if you thought you're in a bear market. So now, you know, you're back to, fighting the battle. So I would say that, these minor catch-ups probably going to be hard to push much over $4. But, it's going to be maybe an early frost, maybe some of these strange things, weather problems around the world. But we're certainly having a real fight with the demand. We're moving into a demand bear market just like wheat on corn. That's the problem.
All right. Now, we do have a question about 2016 sales that we will cover in our Market Plus segment. So be sure to tune in and we'll talk longer-term sales here on the website. Now, let's jump down and talk the soybean market. We're down 14 cents. Same story. Crop condition, crop condition, crop condition. But it doesn't seem to register. Where do you see this bean market headed before the report?
Well, much like the corn and the wheat, we're down here. We're oversold. We're at some support, 920, 940 on the November beans. We have a gap up at 963 on November beans. We're oversold. The soybean market's been holding better than the corn and the wheat market. The soybeans probably have the most downside potential from here if August weather is decent. We make it through without an early frost. So I would say the soybean market catch-up sales on rallies, 963 gap area, then 990 on November beans. Downside, Mike, we still, we're demand bearish over there too, and also from a supply standpoint, maybe. We'll see what the Eastern Corn Belt says. But, you're still targeting probably this 850, 875 on November beans for fall lows, but a lot can happen between now and then. So after this break, not an opportunity for catch-up sales until we see what goes on.
Now, we did see China step in and buy 300,000 tons of old crop U.S. beans. Why do you think they're buying old crop U.S. beans and not Brazilian beans?
Well, and that's a good question. I think actually what it was is a mistake in the reporting because earlier in the week it was a purchase. At the end of the week, it came up with a cancellation, drove us up 14 cents, drove us down 10 cents on Friday. So I think it was probably an error in reporting. The real issue that you have from the demand side is South America just continues to compete with us aggressively. They're about 30, 40 cents cheaper than we are. The surprising thing is they're selling soybeans to China right in the middle of our October gut slot time frame. That's a bad sign.
Yep. Well, now let's jump down and talk about the livestock markets. You're a lifetime cattleman. As you stand here and look at this live cattle market, up $1.80. Cash was a little bit stronger, 147 in Kansas on Friday. Are we through the worst of this summer lull?
We think so. And I think if you look at it from a long perspective, 10 out of the last 12 years, we bottomed the last week in July. Well, it's the last week of July. Certainly feels like we're putting in a seasonal low in here. And now the beef market looks like it's stabilizing. We've got school lunch buying programs ahead of us. We've got supplies maybe not quite as big. So at any rate, we think that we've socked in a low on the box beef, on the cash market, and we'll see if we can get some kind of a pushback up to these levels. Now, the government has some lofty levels for the fourth quarter, up that 155, 160 area. Technically, it's possible to get up there, but you got a lot of competition from the pork and poultry.
Okay. Now, as we're through the lull on the live cattle side, do you think we're through it as well on the feeder cattle, or are we going to trend down now through October?
Well, we've got a different view on the feeder cattle market. We think that the feeder cattle cow-calf operations that we're turning the semi from a big bull to a bear market over the long pull. Pasture conditions have improved, range conditions have improved. We've expanded the herd not only in the United States, but in South America. Brazil's the largest cattle herd in the world. So We've got heifer retentions up 6.5%. You've got the herd up 2%. So we're sellers on rallies on feeder cattle down the road. Now, it's not short term. You don't have to panic. But I think longer term, you're talking about a bear market.
Now, as you're talking about selling rallies, are you looking at feeders up there in the 220s? You look at mid-2 teens. What's a rally to make some sales on?
Yeah, I think I don't think you're talking these big numbers to back up the upside. I think those are multi-year highs up there. I think you're talking more 220. Area. You know, the biggest plus on the feeder cattle is going to be if the fat cattle can push back up, the grain input costs go down, it's going to give us some relief opportunities for the cow-calf operator. So, you know, that's the way we see it right now, Mike.
Okay. Well, let's jump down and talk about the lean hog market. Down 30 cents on the week. Hogs, supply is the conversation, but we've had a surprising amount of strength. Where do you see hogs going here in the short term?
Yeah, the hog market, exactly. While the cattle market, feeder cattle, have been going down most of the summer, the hog market's been going up most of the summer. And, you know, the hog market, if you look at it, the slaughter's been running 13.5, almost 14% more than a year ago. The government report said it should be 8 to 9%. But we're chewing through it and literally chewing through it. If you look at it, our domestic demand's been strong. Export market's picked up. So that's masked. But overall, we think that the hog market is a bear market. We think that we still think that we didn't really cut back on the expansion like the government says. We think that we have expansion in place yet. Efficiencies are there. And so we think rallies are hedging opportunities, Mike. You get October cattle back, or October hogs back up that 67, 68 area. That's probably a sell. Even in the summer months, next June, July, 80, 82.
And you'd be looking to sell out that far? Would you be looking to sell into end of next year?
Yeah, I think as far out as you can from a risk-reward standpoint. You might want to use more options as you get deferred out there. I mean, we can always run into problems with disease problems, something else that's unknown. But I think when you're in this cycle on the hogs, I think you have to prepare yourself for more downside than upside.
All right. Well, Don, thank you so much for joining us here this week.
Thank you, Mike.
That wraps up this edition of Market to Market. But Don and I will continue our discussion and answer some of your questions in our Market Plus segment, and that's only available on our website. You'll also find audio podcasts as well as streaming video of our program exclusively at that Market to Market website. Plus, if you want to interact with us, check out the links to our Twitter and our Facebook feeds. And join us again when we'll explore how one commodity is thriving in the depths of drought. So until next time, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.